Dangote Cement may be going to the London Stock Exchange, but let me tell you what serious investors are really watching. There is a big story in the Nigerian market right now. Excitement, happiness. In fact, on the 8th of this month, Dangote stocks are flying, having full bid, okay, because of this stock exchange prospective listing about to take place. Now, Dangote Cement is reportedly, just like I've said, planning to have dual exchange listing, okay, possibly around September, depending on the market conditions and investors' demands. Reports say that the plan may involve selling about 10% of the company's shares to outside investors, with Dangote Cement valued around 13 billion US dollars. Okay? Now, why does this matter? Why is this important? Why is this moving the market? Because this is not just a Dangote is going abroad story. This is visibility story, liquidity story, and valuation story. When a Nigerian company lists in London, it enters the big room. Just look at Seplat now, look at GTCO, look at how their stocks are doing. Dual listing is contributory to their progress, okay? Now, more international investors can now see the company, more institutional money can analyze it then, and more global funds can compare it with other cement and infrastructure giants. Are you getting it now? So, more liquidity enter the stock if the listing is successful. This is the sweet part. Okay, but the word school is not all about just the sweet part. We talk about everything. We don't hype. No blind hyping. Okay. Now, a London listing does not automatically mean share price must fly. Yes, initially people will, just like now, okay? But investors will eventually start asking, at what price will the shares be offered? Will existing shareholders be diluted? Will foreign investors value it higher or demand a discount? Because it matters, okay? Will the listing improve liquidity or just create temporary excitement? Will earnings continue to justify the price? But these are what you should be asking. Save this video. We teach, no hype, okay? Now, Dangote Cement is not just coming from weakness. Its Q1 2026 result was actually very strong, okay? Group revenue rose 20.4% to 1.198 trillion, okay? And the EBITDA also rose over 22%. And after tax gain rose over 53%, okay? Now, this is money. The company is in a strong position, okay? But it's also understood why global investors might pay attention. But here is the lesson. A good story does not cancel valuation. A strong company can still be expensive. A London listing can support confidence. Yes, I give it that. But you can still need entry discipline. If you already hold Dangote Cement, this strengthens your long-term narrative. But if you want to buy, don't chase it blindly because London excitement, everybody is running. Buy in trenches. Watch the listing details. Watch the earnings. Watch institutional demands. Because in the stock market, headlines create attention, but numbers create conviction. Follow the Wealth School series for practical investment lessons without hype.